Hello guys, welcome back to a new video. So today we're gonna do a case study. I'm gonna share with you the results or the analysis of almost 200 trades that were taken in a backtesting environment. So I was testing my strategy, not a new strategy, my same strategy, but I have added a parameter or a condition to it, a new one. And of course I had to collect a lot of data to validate it, right? So till now I took almost 400 trade, but I'm going to talk about the first 200 and what I found out there. So the thing that we're going to talk about and the results of those 200 trades might change your whole approach in trading. And I'm pretty sure that you already know this, the thing that we're going to talk about, but after watching this video, you will have more conviction in it and you will start taking it seriously and you will understand its real value. All right, so let's get right into it. So I started my backtesting and my data gathering process from the beginning of March. All right, start of March. So let's say this week, right? So from this week, and I took 200 trades in this time period. So from the start of March all the way to the first week of May. All right, so we have 2 months of data, right? So let's remove this. So the results of my backtesting were as follows. And before we start, the time frames were the 15-second time frame. I was trading on the 15-second, and my intermediate time frame was the 1 minute, and my higher time frame was the 1 hour. I can't go above the 1 hour, and that's pretty much all I needed to take all my trades. So from here to here, from March all the way to mid-April, I was getting insanely good win rate. It was around 70% win rate with 1.5 R, right? That's what I found out that it works best for my strategy from previous data. So 1.5 R with almost 70% win rate. Of course, the backtesting results are not identical to live trading, but it is a very good win rate with an RR ratio, right? And if you can achieve 80% of it in live trading, you are good to go. So the first month and a half, I had great days, win streaks, and then suddenly from the mid of April all the way to the first week of May, my strategy started taking one loss after another. I had 6-7 losses out of every 10 trades. So basically my strategy was not profitable, was not remotely profitable. So I was taking one loss after another. And the entry model, everything in those 3 time frames were exactly the same. Nothing I have changed regarding the process of executing and finding trades. So I ended up in this period from here to here giving half of the profit that I made from here. All right, so when I decided to do deep analysis trade by trade and from every time frame I could put my hands to, I found out that my strategy so I came to this conclusion, my strategy is not about taking reversals or taking trades at the beginning of the trend. No, my strategy relied on letting the trend mature, right? And when this happened, this is basically confirming that the trend has started, a new expansion, a new cycle has started, and now I can start looking for entries, looking for continuations to take price higher. And again, once the expansion cycle starts, it's hard for it to stop. This is NQ, and you can see that once we confirm a trend, we tend to go with it. You can see here, especially in the upside rather than the downside, right? Because NQ has been going up forever, right? So once a trend starts, I'm gonna start taking continuation trades. But the idea is I need for this to happen. I need to see the trend in action. So basically, some people will look at it at entering late. But again, this is NQ, and once we start a green move, we're going to continue with it. So this is why I was getting a really good win rate with a lot of win streaks. But something happened from that period of time where I started taking losses. So you can see from a weekly time frame, although I don't use the weekly, I don't use the daily or the 4-hour in my trading. But from the weekly time frame, you can already notice that this wasn't the case. Although I was trading on the 15-second, but on the weekly time frame, you can see that we stopped the trend here. And you might think that you trade on the 15-second, so the weekly should not be a problem, although we were in a range here. But if we go to the daily time frame, you can also notice something. What can you notice here? Right? And here, what is the difference between this maybe, this, and the candles on the box? Forget the range, right? I want you to focus on very specific thing. I want you to focus on the candles that were indecisive. This candle, I made money. This candle, I made money. I made money here, made money here. So each candle that closed either green or red, I made money on it. Almost every time. But once we have an indecisive candle, this one, maybe this one also, this one, this is also an indecisive candle. This one, a lot of indecisive candles in this period of time, right? Once that happens, I get cooked. I have almost 20% win rate when this happens. Now, why is that? Why do I get a horrible win rate during indecisive days? As I told you before, my strategy relies on letting the trend get confirmed, right? And then from here, once I see the trend has started, I'm going to start taking entries. But in indecisive candles like this, once the trend get confirmed or once we have a push to the upside or the downside, everything above it, let's say this is an imaginary threshold, but everything above this line is risky trades, because a lot of time what's going to happen is that we're going to reverse. And then we start a new trend to the downside, and when I see that this got confirmed, I want to take entries. And again, this on the daily, but on the 1 hour, on the 15-second, this looks a completely healthy trend. This is not a choppy condition, not on the hourly and not on the 1 or not in the 15-second. This is a completely healthy trend. So it is only natural to continue with that trend, but since the day here we are ending most of them in our indecisive candles, once this happens, we get another push to the upside and we close at the open of the daily candle. So you can see that my strategy doesn't work well in here, and I can't let the trend mature because that's very risky, and I can't take trades after that happens. So I either take trades at the first of the trend or I don't. Now, of course, I made a lot of modifications to my strategy that I'm going to share later on in another video, another occasion, and I was able to make adjustments and trade this successfully even when this happened. So you can see here we have indecisive candles here, and I was able to at least make my system don't generate signals here as before, because here it was generating a lot of signals, and that's a problem. But why am I sharing with you all this? What is the point of sharing with you all of what I have said? Can you guess? Imagine that this happened. I was trading here, and then here I got a lot of losses. I lost most of my money. Imagine that this right here, this experience happened in live trading, when I was trading live, and I wasn't journaling my trades. I wasn't collecting each trade I took, log it in my journal, screenshot every single time frame there is, and state exactly why I took the trade. Imagine this was the case. If in case I was trading here and this happened to me and I wasn't journaling, I will have absolutely no idea what's going on. And I know that this happens to a lot of traders out there. A lot of traders don't journal, or they don't journal the right way. So I will never figure out why this happened to me. And again, in case this was live trading, there will be two outcomes for this experience. When I was trading and taking a lot of profit here, and here I got cooked, there are two outcomes, and both are very bad. The first outcome is you're gonna blame the strategy. The strategy is not working. Your strategy is not profitable. It was working only for some time, so now it has no edge in the market. I was basically getting lucky with each trade, and now the reality has hit. The strategy is broken. So what a trader would do here in this case, you're gonna start adding a bunch of parameters or conditions to maybe enhance the win rate here, even though he has no idea what's going on or what's the problem. So he's gonna try and test everything he can put his hand to, every shiny indicator out there or a concept. You're gonna start adding it to his strategy to try and make it work again. And eventually he will abandon his whole strategy and move on to a new strategy, a new shiny thing, and repeat the same cycle again. The same cycle will happen and he will be stuck forever by just not journaling his trades. 5 or 10 minutes a day can cause all this. The second outcome, so that's the first outcome. The second outcome is a trader will start blaming his psychology. So maybe here he's making profit. Here he started taking a lot of losses, one loss after another. He will start thinking, maybe I'm not disciplined enough anymore. Maybe I went on autopilot mode where I'm taking every trade there is. I'm not waiting for my A+ setups. I'm not being patient enough, and I should be more patient in the upcoming days. So he's gonna start missing trades that were entirely part of his plan, just because he is too afraid of taking them. He's waiting for something that is not gonna happen, waiting for that A+ setup, although all of the trades that were presented before was his usual setups, right? So I'm gonna start the psychology self-blame, right? Even though the strategy failed to conditions and not mindset, and he will end up in a dead-end rabbit hole trying to fix something that is not broken. So those are the two main outcomes out of this if you're not journaling. So if you're not journaling, you're not taking your profession seriously, and trading is one of those few fields where it has zero tolerance for not being professional. Zero tolerance. You will lose all your money if you're not doing everything right. If you're not journaling, if you're not working on your psychology daily, if you're not optimizing your strategy and collecting a lot of data and analyze them every set of trades, maybe 40, maybe 50. If you're not doing all these things, you will go nowhere in this profession. The only exception that you can stop journaling, right, that's the only occasion, is that when you have traded the exact same strategy for at least 6 years, 8 years, 10 years. The exact same strategy, not the exact same style. No, the strategy. So now you have thousands of trades. You have journaled thousands of trades before across all kind of conditions. The strategy is fully optimized, and now your only edge lies in your mental performance. That's the only occasion where journaling might be just a repetitive process that has no use. And even then, you can still journal for psychological refinements. So that's all what I wanted to talk about in this video. I hope you liked it. I hope you took something from it. And if you have any other questions, you can always DM me in my Twitter account or leave a comment down below and I will answer you as soon as I can. Now, happy trading and good luck.